What's up, YouTube? Welcome back to another video. And in this video, we're going to be talking about how to combine smart money concepts with Wyckoff. Now, Wyckoff and smart money concepts are two different things, but they can be used hand in hand. Okay, so for those of you who understand, you get it already, but for those of you who don't, I'm going to try to kind of explain how you can see smart money concepts, with the order blocks and balances and everything like that, but inside of Wyckoff, like how you can mix those together and how you can use those together for you to get more precise entries, or just to better help you understand Wyckoff without actually, going through the whole complicated part. So you can see Wyckoff in your smart money eyes and not try to learn something completely different or something new, right? Wyckoff is very easy to learn. I just feel like it is explained wrong. Okay, it could look difficult because of all the the labels and everything like that. So I'm gonna try to use I'm gonna try to not use any labels and things like that for you guys, so you guys can understand like how it looks and how the smart money comes into it. All right, so for those who are interested in Discord, link in the description. I know I've seen some people ask me about it. I've seen some other people hit me up on Instagram asking me about it. The link is in the description. So yeah, I've seen some people ask me about it, so the link is in the description, right? You click the link and it takes you to a website. It explains everything that's in the Discord. It explains some things that's in Discord. I mean, I have the Discord pulled up right now. You can kind of see everything that's in here, right? This is all the community stuff, and then you have the course itself, and then we have a voice section, and it's a whole bunch of stuff, right? So if you're interested in that, just hit the link in the description if you're interested in buying it. It's a fair price. It's not nothing crazy. So for those of you interested, go ahead and join. I do also do one-on-one sessions, right? For those of you interested. Okay. Now the one-on-one sessions can range from $50 to $100. So it just depends on how much time you're looking for it to be, and like what type of content you're looking inside the one-on-one session, depending on everything like that. So whatever services you're interested in, whatever you want to learn from, just hit me up. I can also work with you as well. For those of you who have worked with me before or taught to me before, I'm a very fair person. I can work with you depending on your situation and things like that. So just hit me up, talk to me, explain to me what's going on, and then we could work on it and things like that. All right, so without me talking too much, let's get into this. Actually, I wanted to say something. Congratulations to Burr for this 100 RR trade right here. I mean, I could kind of go through it a little bit. I think it was on gold. Show you guys the screenshots. Here's the Wyckoff schematic that he looked at right here, and I believe that was his entry. Yeah, so you can see like he was trading lower, very low time frames. And I mean, with Wyckoff, that happens. There it goes right here. Here's the entry, here's the schematic, and here's his entry, and then the rest is just yeah. So congratulations to him about that. It's very nice. Continue to snipe these markets, man. Continue to snipe these markets. So usually when we see a schematic or a Wyckoff schematic, accumulation schematic, you have one drive go to the downside. So initially, this is our first drive. This first drive initiates and it starts our range, because you'll have the sudden climax and the automatic rally, right? Like I said, I'm not going to try to get into the terms a lot. I'm just going to try to kind of show you how you can put smart money into it. So once we have that range established, you're going to see something like this, right? This is known as the secondary test that tests this initial push, right? You're going to have a push, and then you're going to have your next drive. This next drive is known as the secondary test NB, because now we're in phase B. You only know when you're in phase B when phase C happens, and phase C is the spring. So the market could have did this like this, and this could have ST until our spring happens. This would have been our ST and B. Okay, so ST right here, and then this is going to be our ST and B, right? And then boom, we have our spring. Okay, after that we have our test, and then the market takes off, and then you'll have another LPS entry, and then the market takes off, right? This is like a picture perfect, clear Wyckoff schematic. Okay, so let's talk about it. Let's look at it in a smart money view. Okay, first of all, we know there is liquidity beneath every low and every high, right, beneath every low and above every high. So, I mean, looking at this on a smart money perspective, we know there is liquidity above here. Okay, liquidity above here. First off, liquidity above here that makes this M pattern that we know from those retail days. So we have liquidity above here. Now we know this liquidity wants to be targeted. Okay, that's the first thing. That's the first area of liquidity. What's the next area of liquidity? All right, the next area of liquidity is created by this drive and this drive. So you see right here, these two lows right here create liquidity. Why? Because, I mean, in the smart money eyes, you have one low here, you have the market push up, and then you have another retest of this low and the market push up. So what do you think that's going to happen when the market starts coming back down here? They're going to try to buy around here again, thinking it's an area of support, right? That's basic. So they're going to think this area of support and target these equal highs up here, correct? Usually. Okay, so this first drive here, well, this STMB, this drive to the downside, is a manipulation. So this is the manipulation of these two lows. So the STMB will take out the selling climax and the automatic rally. Not automatic rally, but I'm sorry. The STMB will take out the selling climax and the ST. Usually all that is just a manipulation, right? You can look at the STMB as a manipulation. So you're going to see that first manipulation, right? And then you're going to have another manipulation, which is the spring. The spring is the manipulation of the STMB. So anyone that was buying at this low now is taken out. Anyone that was buying here is taken out. And now we have the spring, which is holding most of our orders, right? This is where the banks and institutions went crazy and they bought the market here. Another reason for these schematics, I think I've explained this before, is, as we know, banks and institutions have a lot of money, so they can't, you know, dump their money into the market at once. So usually what they do is, as they're creating this schematic, as this schematic is getting created, right, organically in the market, they are placing buy orders. So they're placing buy orders as the market is going down. They're buying, right? As the market is going down, they're buying. So usually that's what you'll see. When the market is going down, they're buying. As they're buying, right, that opens up a lot of liquidity in the market for them to fill their orders. They're buying, there's other people selling. They're buying, there's other people selling, right? So once they're buying this, because as you know, as the market is going down, that means people are selling. So when people are selling, they are buying. As they are buying this, once this happens, boom, all these people that are selling are now trapped, and that opens a lot of liquidity for them to get their orders filled, and now they can move in the direction they want to. They can't move until the orders are filled, okay? So essentially, it's simple. You have liquidity formed from the first drive, and then this next drive that tests the first drive, and then after that, you have your STMB here, takes out these two lows here. Then you have your spring, which is the last manipulation. You can view this as the last down move before the move up, breaking structure. And as in smart money, what do we know? The last down before the up move, you know, imbalance and all this stuff here that is created here is known. This is our sponsor candle, order block, institutional candle. So once you see that spring happens, now you're ready to take an entry. I mean, it's simple. You find the order block of the spring. So the spring itself can be an order block, but there can also be an order block inside of the spring, if you understand what I'm saying. So simply what you can do is, let's say this is the order block here. Let's say this is an order block. The spring created an order block, right? You take 50% of the order block, well, of the spring. You take 50% of the spring. Stop loss underneath. And now that is your first entry. Now, what's your second entry? Well, this quote unquote sponsor candle / order block is mitigated. So what is your next area? Here is your next quote unquote sponsor candle / order block right here, which is your LPS entry. Take 50% of that, and that's simple. Okay, it's that simple. That is the next entry. So first entry is the spring, the mitigation of the spring, and then your next entry is the mitigation of the spring that mitigated the spring. Okay, so that is kind of like a smart money way of accumulation. And if you know, let me see if I can go back real quick. If I flip all of this over and invert this chart, it is the same thing for a distribution, right? It is the same thing. Instead, it's just different. It's just different terms and it's different like words for it, but it's the exact same thing, right? It looks exactly like this. All right. So let's look at this. This right here is an accumulation, right? This is a clear accumulation. We are in a point of interest. Okay, we're in a point of interest. So when you're looking for accumulation, right, when you're looking for entries in like in general, make sure you have a point of interest, a certain area where you know the market should react off of, right? That area could be you know, a previous area of manipulation, a previous accumulation, a previous distribution, or unmitigated candle, or unmitigated sponsor candle, a higher time frame candle. It could be anything. It could be all of those things. Just make sure you understand supply and demand and where the market wants to react and where it doesn't. Okay. So here's our accumulation here. Remember, we have two types of accumulation. Now, this would look way better if I was like on the 30-second time frame, but I don't have the seconds time frames. I don't have them yet. So right now I'm on the 1 minute, but I mean, with trained eyes, you can clearly see this is accumulation, right? We have our selling climax right here. Remember, there's two types of accumulate, well, 4 types, but there's 2 main types that I look for. Okay, so essentially this is the selling climax. So looking at it just off of a smart money view, we can see liquidity is created from this doji candle right here. We have this doji candle. We have all these lows tapping around this area, but none of them has broken this area yet. Okay, so there's liquidity underneath there. All right, liquidity underneath there. What do we have? Manipulation. This could be seen as our spring. All right, manipulation that raises liquidity. We go back towards the upside. Now we just find the sponsor candle / order blocks to enter off of. Since this over here has mitigated this, you know, sponsor candle itself, you can take the 50% of this range right here. And you know, spoiler alert, right? A little quick tip. This right here on lower time frame is just a reaccumulation. Okay. So boom, entry there. Your stop loss, if you want to be safe, you could go all the way underneath the spring, because keep in mind that until we invalidate the spring, this accumulation is technically still valid. Okay, so meaning this market could have came lower underneath this little area, but it still would have been valid because we haven't broken the spring. Until we break the spring, that's when we consider the accumulation to be invalid. Or the opposite way on the distribution, UTAD. Okay, UTAD and spring is the same thing. The spring is for accumulation, UTAD is the same thing, but it's just for distribution. So understand that. But in this case, right, you could just been safe and put your stop loss underneath the spring, or if you know, if you want to be a little bit risky and you want to be more aggressive, then you can just put your stop loss in here. Go for 2 pips. You're kind of playing dangerous when you try to go for those, you know, 1 point pips and then 1.5 pips. You know, just go for a regular 2 pips. I mean, it's up to you really. And then that's it. I mean, that's the entry right there. Clean accumulation, clean Wyckoff. All right. Let me see if I can find a distribution for you guys. Right. So here it is again. Distribution. Liquidity formed right here. And you can see that our UTAD here is a little bit larger. And it can be like that. All right. You can see this manipulation is a large manipulation. Okay. So we have liquidity formed here from all these highs. We have this big manipulation towards the upside, drive towards the downside. We break the low here. Guess what? Now we look for our sponsor candle to trade off of. Now remember, like I said, okay, this whole entire thing is a quote unquote sponsor candle. Since we're on the minute, we're on the 1 minute time frame, this whole thing, this whole UTAD is a sponsor candle. So you could take the 50% of this whole UTAD if you wanted to. You could, you know, even go underneath and get even more fractal. And now we're looking at this little drive down here. Well, what needs to be mitigated out of this? This candle right here. That's the candle that mitigate. We have imbalance all throughout here. So this is the only thing that needs to be mitigated out of this UTAD. All right, you take your entry there, stop loss above here, and now you have your distribution inside of your point of interest. So notice the common factor. We're inside of a point of interest, because don't get me wrong, accumulation and distribution can happen anywhere in the market, but depending on where you're looking for it, that's when it can be used the best for you. Because I know I've seen it many times where people are like, okay, I can't get into Wyckoff, it doesn't work for me. It's because you're looking for Wyckoff in the wrong places. Wyckoff literally happens everywhere in the market. You have to look for Wyckoff in the right places. Okay, what are the right places? Supply and demand areas, areas that you're expecting a move from, areas that you know the market will give you a reaction. Okay, look for that lower time frame entry, look for that lower time frame walk-off schematic, and you're gonna have a better entry, better sniper entry. Okay, so don't just go in the market and just, oh, I see a Wyckoff, I see accumulation, I'm gonna take it, because I will tell you it will fail. So I hope you guys enjoyed this video. Let me know what other videos you guys want to see, what other topics you guys want me to cover, whether it's trades or, you know, any outlooks or any case like that, right? Because I do upload my market outlooks sometimes on the YouTube for you guys to see what I'm looking at for the week. Okay, so maybe that'll help you guys, and that's why I do it, to help you guys, give you an idea of what, you know, trades to look for and what pairs that to look for that are looking good. Okay, so if you guys want to see more of that, let me know. If you guys have any questions or concerns, whether it be on Wyckoff, accumulation, distribution, let me know in the comments. If you have questions about the Discord, one-on-one session, whatever, you can, you know, PM me, private message me, or reach out to me some type of form of social media, Instagram, Telegram, whatever the case may be, even on Discord. All right, so I'll see you guys in the next video. Peace out.